Close your eyes for a moment and imagine this. Two people living in the same world, earning similar incomes, facing the same challenges. Yet years later, one is calm, confident, prepared, while the other is stressed, reactive, always one step behind. The difference isn't luck. It isn't intelligence. It's decisions made quietly, consistently before everyone else was paying attention. Most people think wealth is about chasing the next big thing. The top stackers know it's about positioning, about owning something real, something finite, something that rewards patience. That's where silver comes in. Not as hype, but as discipline. Not as a gamble, but as a mindset. Let's talk about what it really means to be in the top 20%, the top 5%, or the top 1% of silver stackers. Not to brag, not to compare, but to understand how small intentional actions compound into life-changing outcomes. Being in the top 20% isn't about massive wealth. It's about starting when others delay. It's the person who buys a little consistently instead of waiting for the perfect moment. Think of the entrepreneur who didn't wait for everything to line up, who started with limited tools but clear intent. A few ounces at a time, month after month, builds more than a stack. It builds identity. You stop seeing yourself as someone who reacts and start seeing yourself as someone who prepares. Moving into the top 5% requires something deeper: restraint. This is where discipline separates from impulse. Successful investors often say their biggest advantage wasn't timing the market, but controlling themselves. Instead of spending to impress, they accumulated to protect. Silver here becomes a metaphor for delayed gratification: solid, quiet, powerful. Every ounce represents a choice to think long-term in a short-term world. The top 1% isn't just about quantity, it's about conviction. These are people who aligned their habits with their vision. They automated good decisions. They learned, adjusted, and stayed consistent even when it felt boring. Like building a business, brick by brick, they understood that boredom is often the price of mastery. Silver stacking at this level reflects a life philosophy: own what lasts. Minimize fragility and build resilience before it's obvious why it matters. Action changes everything. Start with what you can, but start now. Set a simple rule for yourself. Learn continuously, but don't overcomplicate. Protect your downside while positioning for upside. Take calculated risks, not emotional ones. Build habits that future you will thank you for. Most people believe income is the deciding factor in wealth, but over time, it becomes clear that positioning plays a far greater role. Two people can earn the same amount and still end up in completely different places financially. The difference is not how much money comes in, but how early and how intentionally decisions are made. Positioning is about where you place yourself before momentum arrives, not how fast you react once it's obvious. Income is temporary and often fragile. It can increase, decrease, or disappear entirely. Positioning, on the other hand, creates stability. It is the act of aligning your actions with long-term outcomes instead of short-term comfort. People who focus only on timing wait for perfect moments that rarely arrive. Those who focus on positioning build quietly while conditions are uncertain, understanding that preparation comes before opportunity. In investing, timing is seductive. It promises control and precision. But even experienced professionals struggle to time markets consistently. Positioning removes the need for perfection. It accepts that uncertainty is normal and builds around it. By spreading decisions over time and committing to real assets gradually, risk becomes manageable and progress becomes steady. The same principle shows up in life. Careers don't advance because of one perfectly timed move, but because of years spent developing skills before they were urgently needed. Businesses don't succeed because of one lucky break, but because systems were built long before results appeared. Positioning creates optionality. It gives you choices when others feel trapped. Wealthy individuals often look unimpressive early on. They drive modest cars, live below their means, and invest consistently while others consume. Their advantage is invisible because it is internal. They're not waiting to feel rich before acting responsibly. They act responsibly long before wealth becomes visible. Timing depends on external events. Positioning depends on internal discipline. One relies on luck. The other relies on habits. When you're positioned correctly, you don't need to catch every move. You only need to participate consistently. This removes stress and reduces emotional decision-making over time. Good positioning compounds. Small advantages stack up. Missed opportunities matter less because the foundation is already strong. When conditions finally shift, those who are positioned don't scramble to act. They are already in place. Wealth is not built by predicting the future perfectly. It is built by preparing for multiple outcomes and committing to decisions that benefit you regardless of short-term noise. Positioning creates resilience, clarity, and confidence, while income and timing fluctuate beyond your control. This isn't just about silver, it's about becoming the kind of person who plans ahead, stays calm under pressure, and moves early while others hesitate. If this perspective resonated with you, support the channel, stay connected, and share this message with someone who's ready to think differently about wealth, discipline, and long-term success. The top 20% are not defined by perfection or large resources. They are defined by movement. They begin while others hesitate, not because they know everything, but because they understand that waiting for certainty is a form of delay. Starting early creates an advantage that cannot be replicated later. No matter how much effort is applied, time is the only asset that cannot be replaced. Consistency is what transforms an ordinary start into meaningful progress. Small actions repeated regularly outperform large actions taken occasionally. This principle applies across investing, business, and personal growth. The person who commits to steady effort builds momentum quietly, while the person chasing the perfect moment often remains stuck in planning mode. Those in the top 20% accept that mistakes are part of the process. They do not wait to feel confident before acting. Confidence is built through action, not contemplation. Each small decision reinforces identity. Over time, these decisions reshape how someone sees themselves from a passive observer to an active builder. In investing, consistency reduces emotional pressure. Instead of trying to guess when to act, a steady approach spreads risk across time. This removes the need to be right at any single moment. It replaces stress with structure. Structure creates calm, and calm leads to better decisions. Early starters benefit from learning curves. They gain experience while others are still consuming information. By the time the crowd arrives, they have already refined their process. This early exposure allows for adjustment without panic. It builds familiarity with uncertainty, which becomes a competitive advantage. In life, the same pattern holds. Skills develop through practice, not intention. Careers advance through repeated effort, not one decisive move. Health improves through daily habits, not short bursts of motivation. The top 20% understand that progress is rarely dramatic, but it is always cumulative. Perfectionism often disguises fear. The desire to get everything right before beginning delays growth. Those who start early accept imperfection and trust iteration. They improve through feedback and experience rather than theory. Staying consistent also builds trust with oneself. Each completed action reinforces reliability. This internal trust becomes confidence. It removes dependence on external validation and creates independence in decision-making. The advantage of the top 20% is not that they are smarter or luckier. It is that they value time and consistency more than comfort and certainty. They move forward while others wait for permission, allowing progress to compound long before it becomes visible. The difference between the top 5% and everyone else is rarely intelligence or access to information. It is discipline. Discipline shows up in moments when spending feels easier than saving, when reacting feels more comfortable than waiting, and when short-term pleasure competes with long-term security. Those who rise learn to delay gratification without feeling deprived, because they are guided by purpose rather than impulse. Delayed gratification is not about restriction. It is about choice. It is choosing future strength over temporary relief. In investing, this means accumulating quietly while others consume visibly. It means ignoring trends designed to trigger emotion and focusing instead on assets that reward patience. Silver becomes a tool for this mindset because it demands time and consistency rather than instant payoff. People in the top 5% structure their lives to support discipline. They automate good decisions and reduce exposure to temptation. Instead of relying on willpower, they design systems. This could mean regular allocation, fixed rules, or clear boundaries around spending. Systems protect discipline when emotions run high. In business and careers, the same principle applies. Those who master delayed gratification invest in skills that do not pay immediately. They choose learning over leisure, preparation over praise. While others chase recognition, they build capability. Over time, this quiet investment produces leverage that compounds. Discipline also creates emotional stability. When decisions are aligned with long-term goals, short-term fluctuations lose their power. Fear and excitement both weaken. This calm becomes an advantage because it allows for rational adjustment instead of impulsive change. Many people associate discipline with sacrifice, but those who practice it experience freedom. They are less dependent on income spikes, external approval, or constant stimulation. Their security comes from structure and foresight. This independence reduces stress and increases clarity. Delayed gratification strengthens identity. Each time a long-term decision is honored, self-trust grows. That trust fuels confidence and reduces doubt. Over time, discipline becomes a habit rather than an effort. The top 5% understand that wealth is not created by dramatic moments, but by ordinary decisions, repeated under pressure. They resist the urge to consume today what could protect them tomorrow. This ability to wait, to hold, and to build quietly creates a separation that widens with time. Discipline and delayed gratification are not talents. They are skills. Skills can be practiced, refined, and strengthened. Those who commit to them early find that results arrive naturally, not suddenly, but steadily through consistency and intent. The top 1% are separated not by how much they know, but by how deliberately they live. They do not rely on motivation alone. They build systems that operate even when motivation fades. Conviction at this level is not emotional confidence. It is structured belief, reinforced by routine and repetition. Long-term vision guides daily action, keeping decisions aligned even when conditions change. Systems remove friction. Instead of debating every choice, the top 1% reduce decisions to processes. Automatic investing, predefined rules, and clear priorities eliminate hesitation. This creates consistency without requiring constant effort. When systems are in place, progress continues quietly in the background. Conviction grows through experience. The top 1% test ideas, refine approaches, and stay committed long enough to see results. They do not abandon strategies at the first sign of discomfort. They understand that discomfort is part of growth. Each challenge strengthens belief because it is survived rather than avoided. Long-term vision provides direction when short-term results are unclear. It allows patience without passivity. Vision acts as a compass, preventing overreaction to temporary noise. In investing, this means focusing on accumulation and protection rather than constant optimization. In life, it means choosing paths that build capability over time rather than chasing immediate rewards. The top 1% think in decades, not weeks. This extended perspective changes behavior. Risks are assessed differently. Opportunities are evaluated by sustainability rather than excitement. Short-term sacrifices feel small when measured against long-term goals. Systems also protect against emotion. They prevent panic during downturns and overconfidence during success. By removing emotional decision-making, systems create stability. Stability allows compounding to work uninterrupted. Conviction is reinforced by clarity. Knowing why a decision was made reduces doubt when outcomes fluctuate. The top 1% document reasoning, reflect regularly, and adjust thoughtfully. This feedback loop strengthens confidence without rigidity. Vision without systems remains fragile. Systems without vision become mechanical. The combination of both creates resilience. Actions remain purposeful and progress remains steady regardless of external conditions. Those who reach the top 1% are not driven by urgency. They are driven by alignment. Their habits reflect their goals and their systems reflect their values. Over time, this alignment produces results that appear extraordinary but are built through ordinary discipline, repeated consistently. Silver stacking is often misunderstood as a purely financial activity, but in reality, it reflects the mindset of the person behind it. The amount accumulated matters less than the intention, discipline, and patience that guide each decision. For many, silver becomes a physical representation of how they approach uncertainty, risk, and time. It reveals whether someone seeks quick reassurance or long-term stability. Every ounce added is a decision delayed elsewhere. It is a choice to store value instead of consuming it. This habit strengthens awareness around spending and priorities. Over time, stacking shifts behavior. People become more selective, more intentional, and less reactive. The metal itself does not change, but the person holding it does. Silver teaches patience because it rarely rewards urgency. Those who expect immediate validation become frustrated. Those who understand cycles remain calm. This lesson extends into other areas of life. Careers progress when effort continues without instant feedback. Skills improve through repetition rather than bursts of motivation. Relationships deepen through consistency rather than dramatic gestures. Stacking also highlights emotional control. Price movement tests confidence. Periods of silence test conviction. How someone responds during these moments reveals their mindset. Emotional reactions lead to inconsistency. Structured behavior builds stability. Over time, the stability becomes self-reinforcing. Mindset determines outcomes more than strategy. Two people can follow similar approaches with different results because their emotional responses differ. One panics and abandons plans. The other adjusts calmly and continues. Silver amplifies this difference because it removes constant stimulation. It forces reflection. The act of stacking encourages long-term thinking. Each addition represents belief in future value rather than present gratification. This orientation toward the future influences decisions beyond investing. It promotes planning, patience, and foresight. Silver also creates awareness of ownership. Holding something tangible reinforces the concept of real value. It reduces reliance on abstractions and increases appreciation for durability. This shift in perception strengthens confidence during uncertainty. Over time, stacking becomes a practice rather than a goal. It builds habits that extend into broader financial behavior. Budgeting improves. Risk management becomes thoughtful. Consumption becomes deliberate. Silver stacking does not guarantee wealth, but it cultivates qualities that make wealth sustainable. It mirrors discipline, patience, and long-term vision. The true return is not only what is accumulated, but who you become through the process. Small actions are often dismissed because they feel insignificant in the moment. People look for breakthroughs, dramatic wins, and visible progress, overlooking the quiet power of repetition. Yet, it is these small repeated actions that create the widest separation over time. The difference between those who build lasting success and those who remain stuck is rarely one big decision. but hundreds of small ones made consistently. Repetition creates identity. Each action reinforces a pattern of behavior. When someone chooses to act again and again, even in modest ways, they begin to see themselves differently. They are no longer someone who intends to improve. They are someone who does. This shift in identity fuels momentum because behavior aligns with self-image. In investing, small repeated actions reduce risk and emotional stress. Allocating regularly spreads exposure and removes pressure to be perfect. It allows learning to happen naturally and adjustments to be made calmly over time. The steady approach compounds into significant positioning. The same principle applies in business and personal growth. Skills are built through daily practice, not occasional effort. Relationships are strengthened through consistent attention, not rare gestures. Health improves through habits maintained over time, not short bursts of discipline. Small actions accumulate into large outcomes. Many people underestimate compounding because it is slow at first. Progress feels invisible, leading to doubt. This is where most give up. Those who persist understand that the early phase is deceptive. The curve is flat before it becomes steep. Staying consistent during this phase is what creates separation later. Repetition also builds resilience. When actions become habitual, they require less mental energy. This reduces burnout and increases sustainability. Instead of relying on motivation, which fluctuates, repeated actions become automatic. Over time, small advantages stack. Better habits lead to better decisions. Better decisions lead to better outcomes. This chain reaction widens the gap between those who persist and those who stop. Those who win consistently are rarely flashy. Their success appears sudden only to those who are not watching the process. In reality, it is the result of countless quiet repetitions. Small, repeated actions are powerful because they operate below the surface. They do not seek attention. They do not demand validation. They simply continue day after day, shaping results and identity simultaneously. This is how true separation is created, not through moments, but through momentum built patiently over time. Real security is rarely created in moments of urgency. It is built long before it feels necessary. During periods when preparation seems optional and caution feels excessive, most people wait until pressure forces action. By then, choices are limited and stress is high. Those who build real security act earlier when the cost of preparation is low and the rewards are invisible. Preparation requires imagination. It means considering outcomes others prefer to ignore. This does not come from fear, but from responsibility. Those who prepare are not pessimists. They are planners. They understand that stability is not guaranteed and that resilience must be built deliberately. In financial life, this means owning assets that do not depend on perfect conditions. It means maintaining buffers, diversifying thoughtfully, and reducing unnecessary exposure. These choices often feel boring compared to chasing returns, but boredom is the price of safety. When uncertainty rises, those who prepared feel calm while others scramble. Security also comes from habits. Regular saving, controlled spending, and consistent learning create a foundation that absorbs shocks. These habits compound quietly. Over time, they provide flexibility and options. Options are the true currency of security. In careers and business, preparation looks similar. Skills are developed before they are demanded. Networks are built before they are needed. Systems are put in place before growth creates strain. Those who prepare early move smoothly through change because they are not improvising under pressure. Emotionally, preparation reduces fear. When plans exist, uncertainty loses its power. This clarity improves decision-making and preserves energy. People who prepare do not overreact because they are not surprised. Most people underestimate the value of early action because it lacks immediate payoff. They confuse visible progress with real progress. Preparation operates beneath the surface. Its impact is felt later when conditions shift. Security built early feels unnecessary until it becomes essential. At that point, it feels priceless. Those who waited wish they had acted sooner. Those who prepared simply continue. Building security is not about predicting specific events. It is about acknowledging uncertainty and responding with structure. This mindset creates stability across all areas of life. Those who understand this principle stop asking whether preparation is needed and start asking whether they are ready. They invest in resilience before it is demanded, knowing that calm in difficult moments is earned long before those moments arrive.